A very warm welcome to you. It's always my pleasure to welcome you on the program each week. Trust you're well and still keeping safe. On our lineup this week, first we join Faith and our guest, Sir M.O. Oyegunle, the 50th President and Chairman of Council of the Chartered Insurance Institute of Nigeria, CIIN, on the CEO rendezvous for the concluding part of their exclusive interview on the challenge of training and manpower development in the face of the pandemic. Speaking during the interview, Sir Oyegunle said that while the ongoing recapitalization is not easy, it is needed for any insurance company that wants to make positive impact. To take a listen.
An insurance company to impact positively today, you need capital. Capital to buy technology, capital to do research, capital to penetrate the market. I mean, there's no two way about it. And it was obvious that with what inflation has done with the level of our capital before, something else has to happen.
We will also bring you excerpts from the launch of the Africa Insurance Pulse, the digitization of Africa's insurance markets, which was done virtually. The Africa Insurance Pulse, which is a constant on the AIO calendar, is a research series sponsored by Africa Ray and produced by Faber Consulting. Speaking during the launch from South Africa, Mrs. Delphine Maido Traore, the president of the African Insurance Organization and regional COO, Allianz Africa, said that digitization will not automatically transform the business of insurance on the continent. To take a listen.
Digitalization will not magically increase insurance penetration in Africa if we don't start with the fundamentals. And the fundamentals are, how do we simplify our process? How do we simplify our products? And also, how do we simplify the customer journey so that we can digitalize at full scale?
Plus, of course, all the other extras we bring you each week on the program. So I urge you to sit back, relax, and enjoy the show. Details in just a moment. Please stay with us.
What is the Institute's strategy to develop the skills and knowledge level of the industry workforce in the face of the COVID-19 pandemic?
One, the first webinar we had in May is to tell our professionals that the game has changed. And what do we mean by that? You have to keep on improving yourself. I mean, if before now you think you can get away without understanding IT, now you cannot do that again. So the first thing is awareness for people to know that they must keep on improving themselves. Then number two, we offer courses, specific courses. College, if insurance is doing very well about that, as to specifically tailored to what you can do to improve yourself. And I think we've done in agriculture, we've done in oil and gas, we've done in a survey, specifically so that people can know that in their areas of specialization, these are the things going on, these are the things happening, and they need to improve themselves. So that's what we're doing for the professionals, people that are professionals already. For those coming up, that one is easier for us because easily we can improve on the syllabus, we can improve on the program, we can give additions to what is already printed so that they know that in addition to that, they need to cover this scope for them to do well in their exams. So no doubt about it, the game has changed and all professionals know that they have to keep on improving ourselves. It is our duty to make sure we continue to drum that into their ears, and that's exactly what we are doing.
Okay, sir. What are some of the lessons the Institute have learned as the training arm of the industry in the midst of the COVID-19 pandemic?
First and foremost, nobody was prepared for COVID-19. And like every other thing in life, be prepared. Like Boy Scout will say, you have to be prepared for challenges. That is one thing. Yes, we were using IT before now, but the IT challenge is at another level entirely. But we thank God we are learning to cope. Also, we're used to having programs physically. That was what we were doing before now. In fact, we've never had any virtual program before COVID-19. Now, we have to do practically everything virtually. So it's a big challenge. I know when we started, we actually outsourced the IT requirements when we started because we didn't have it. We were not ready for it. But now we've been able to build capacity now and we are doing things. Because, I mean, we are in a unique industry. Unique industry in the sense that is our members, so long as we keep on satisfying our members, we will remain in business. But if we are not delivering value to them, then we'll soon be out of business. So we must keep on delivering value to our members. And that is what we try to do. Yes, things have changed, but at the same time, we keep on making ourselves relevant. And people are appreciating what exactly we are doing. And that's why we'll keep on being there for now.
Okay, sir, for an industry that has to now embrace technology in a wider dimension, they are currently going through recapitalization. The COVID-19 crisis has also affected a lot of businesses and all that. Acquiring technology is not cheap. So what's the major challenge you see in the whole of this arrangement?
You're right, acquiring technology is not cheap. In addition to it being cheap, unfortunately, many of us are dissipating energy the way we go about it. Insurance companies are spending huge amount of money to acquire technology. So I just hope and pray a situation will come where they can share technology to make it cheaper. That is on one hand. But more importantly, one of the reasons the government, well, don't let me say government, NICOM is insisting on recapitalization is that an insurance company to impact positively today, you need capital. Capital to buy technology, capital to do research, capital to penetrate the market. I mean, there's no two way about it. And it was obvious that with what inflation has done with the level of our capital before, something else has to happen. Yeah, the recapitalization is painful, but there's nobody arguing against it. In fact, even the operators, what they are saying is the timing. Not that recapitalization is not necessary. It's in our own interest for the companies to be stronger and better. So the point is, yes, technology is expensive, but you can go about it at your own pace. I mean, you don't have to start flying drones overnight. The important thing is that the layers are totally different. There are big companies that actually may need big technology immediately, but there are small companies that can grow along the line. My prayer is that let them just get it right, not this trial by error that most of our companies are doing, which at the end of the day makes it extremely expensive for them. If you know what insurance companies are spending on technology, you'll be worried for them. Because many of them don't even get it right.
Right, okay. Exactly. Okay, I want to do a little bit on the issue of recapitalization. Oftentimes, some of the soundbites you get from the market is, with the current level of recapitalization in the market, insurance penetration in Nigeria is still less than 1%. So what do you need the additional money for?
Let me answer your question rightly. What do you need the additional money for? One, for visibility. And I will explain what I mean by visibility. Insurance is a business of trust. The populace must trust us that we are there and that we will always be there and that we will deliver when there is need for it. So visibility is key. I mean, we can't deny it. In other crime, advertisements, public programs are what insurance companies spend a lot of money on, because you want to register your name in the mind of the public for them to know, when you say, yes, we know them. That is one. Then two, for penetration itself, we need to spend money for people to know that we offer service that they need. Like somebody said about 2 months ago, I was in one program and said, the way we are presenting the insurance to our people, we are not there yet. We should present insurance as alternative money. People should know, like just as they work hard for money, protecting the asset acquired is the other side of acquiring the money. Our people are still not getting that message. And of course, it's going to cost money to be able to do it. We're talking of doing short videos, going around everywhere, meeting all sectors of the economy. It's not cheap. So we need the money. Sadly, the question you can ask next is that which one should come first? Is it not, why not get the business first before you raise the money? But sadly, if you don't raise the money to go after the business, you will not get the business. So we need the money. There's no two way about it.
Okay, sir. Finally, as we close, the Institute has been able to maintain its integrity and its vision for more than 50 years going, and they are for more than 50 years, and they are still at that level. What would you say is the singular ingredient that has sustained the credibility and the integrity of the Institute?
Singular ingredients, I would say the succession plan. The succession program of the Institute is such that you must have been in council for nothing less than minimum. I think you must have won 2 elections before you can become president. Even now, it's even looking like you will do 3 times before you can become president. So if you are in council for 9 years, there is no way you will not understand and imbibe what the CIN stands for before you become president. And as I said earlier, you will see that all the past presidents have, in one way or the other, been able to build on what the Institute is doing. When I was doing the professional exam, I did London because it was not available locally. Some people brought it to Nigeria, and subsequent presidents have been able to sustain the credibility of that examination. We've been able to do our own textbooks. We've been able to domesticate our textbooks. So we all have a good succession program. I mean, this is not like what happens in political terrain, that a president will come, abandon what the other one was doing, and start his own afraid. No, you can't do that here. Because one way or the other, you've been part of the program all along anyway. You were in council for 9 years. So how can you now say that what has been going on that you've been part of is not what you are going to sustain again? And I think that has helped the Institute. So if you ask me, I think the succession plan, I think is fantastic. I think it's good. And all the past presidents anyway are there to keep on guiding whoever is sitting on ground today. I mean, I'm very much in touch with my past presidents. If there's anything that I'm not happy, that I'm not clear about, I can only talk to them and get their advice and move forward. So I would say it's succession. That is one of the greatest advantage we have here, because it's making things happen. It's making things to work.
On that note, I'd like to say thank you, sir.
Thank you very much, my dear. Thank you.
Thank you so very much.
Alright, welcome back. Moving on, we now bring you excerpts from the launch of the Africa Insurance Pulse. The Africa Insurance Pulse, a research series of the AIO, is usually launched at the annual AIO General Assembly, which could not hold this year because of the COVID-19 pandemic. The 5th edition of the Pulse draws on in-depth research and structured interviews with senior executives of regional and international reinsurance companies, intermediaries, and insurtech companies operating in Africa. Enjoy the excerpts.
Africa's insurance penetration, we're talking here only non-life when we look at the graph, has hardly improved in the last 30 years. You can see on the very right that insurance penetration in Africa for these 3 decades is still at 1%. That is well below the global average of 2.8 and also below the emerging market average. Now, one problem obviously is the lack in size of African markets. If you disregard the top 10 or if you leave them out, then all the other markets are basically below 1 billion in size. Also, there is a lack in diversification within these markets. A large market, for instance, like Nigeria, Africa's leading economy, penetration is only is exceptionally low at 0.2%. The market is dominated by large risks, and personal insurance sector is less developed. Motor only accounts for 16% in this market, although the average for emerging markets would actually be 44%. So basically you see here a dominance of large risks. Obviously, the growth in penetration is obviously also affected by the fact that, you know, the numbers are given in US dollar to enable a comparison, and obviously currency depreciation plays a major part in these developments. And what are regulators actually doing to encourage the digitization of the industry, also in particular in light of the experience that we have had with COVID-19?
I think we have to realize that the scale and the pace of change in the industry presents a significant challenge for the regulators, especially, you know, in the aftermath or in the middle of the COVID-19. I mean, in order to keep pace with the digitization of the industry and ensure that regulation remains relevant to the new normal, or let's put it like this, the new normal might be the business as usual of tomorrow in a way. So extensive sandbox testing, enabling innovative insurance businesses to take part in assessments of how they meet regulation, obviously without fear, you know, of penalties, definitely a way to encourage the digitization process of the industry. But the big question that is always put on the table is, what we also have to take into account is that digitization is a very capital intensive investment. And how ready is the insurance market at a time of low investment return and inherent pressure on underwriting results? I mean, how ready and prepared is the market to embrace the digital transformation process, and at what pace will this happen? So at the time of uncertainty, obviously, everyone wants to build up a resilient enterprise risk management process. And in a way, where is the focus right now into digitization, especially in the light of the COVID-19? And the challenges are immense in a way. You could see that the market is shrinking in a way in some markets. And also on the other side is what we have to also take into account is that bridging the technological divide among players, that is the technological gap that exists among players in the industry, and ensuring a level playing field is somewhat the challenge of the regulator from the outset.
If we're going to do regulation to support digitalization, then we need to do it all the way from beginning to end. We see that in the Southern African countries, we've seen that insurance penetration is much stronger than the rest of the continent, also because they have a regulatory environment that is supporting digitalization. In some of the Francophone countries, we are still sitting here with digital signature not being approved. So we can digitalize our way all the way. We can make sure that we issue the policy, you know, we sell through a platform, we provide claim services to the platform, but we are not allowed to sign electronically our insurance policy. So it's nice to say that, you know, if there's, you know, the commission should be shared and all these things, but they also have to be courageous enough and understand that, you know, the world is changing fast and that the infrastructure is changing fast. Yes, we understand there's cyber attacks, but at the same time, companies are also working quite hard to make sure that they are protected as much as they can against cyber attacks. We at Allianz, we have a cyber defense team sitting in India, and their job on a daily basis is to hack Allianz systems and websites to make sure nobody can get in. And if they are able to get in, that means that other people can get in as well. So insurance companies are investing a lot for this. As I said, we're investing 10% of our premium, but at the same time, the regulator needs to follow us on this. We're not going to do anything stupid. If we're asking for electronic signature, is to make sure that the consumer journey is fully digital until the end. What's the point of issuing a policy all digitally, and then you have to get the consumer to come in the office and sign? So we need to make sure that this is the discussion that we've had also at the last AIO, when we had various regulators from various countries come in But they need to follow us in this challenge. If not, then we are going around in circles.
In terms of the cyber risk, maybe in the last 5 years, there have been a lot of progress around the world. We are struggling as an industry to understand the risk because the risks are moving so fast. We are already talking about 5G, Internet of Things. There are things we've never even seen, but we know they are coming. So it's very difficult to craft a product and understand the risk and measure it and price it and bring capacity behind. You know, we are a very conservative industry. A very conservative industry because we are regulated, so we cannot do anything we want. And also, most of the time, deployers of capital belonging to others. So we have been very good in managing all type of risks like property, fire, and so on. But today, cyber risk, there are products already. So Africa is insured by Allianz in cyber risk, for example. And this is a huge question about demand and offer. You see, for example, COVID has created a demand. There are people who are now giving out a cover against COVID, whatever small it is, but we have started to do it. When we were approached for the first time, I think from East Africa, to give an insurance cover, we hesitated. They have to contact me because we have never done that. So I said, we have to show relevance. We should put some capacity behind. But when you ask banks, I challenge you in your market, go and ask banks. They are big, they have a lot of money. How many have a comprehensive cyber risk insurance cover? There are very few. Why they are not doing so? There are reasons behind, because the offer is not as detailed, as sophisticated, as easy to understand. There are few underwriters around the world. I know very few on the continent, just to say that I don't know any who can underwrite properly. So we have to partner with those who are advanced, and even those who are advanced, they don't share their capacity easily. Their capacity is really very controlled because the risk is still difficult. So there is insurance. Today, if you come to Africa Re or to Allianz, just to mention Allianz because they are here on the platform, we have conducted seminars together with Allianz here in the Nigerian market to explain that there is a capacity, that there are covers, and to show people how we can do it together.
That's our time on the program this week. Many thanks for tuning in. Please keep a date with us, same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. My name is Lucy Olugbe, and until next time, from the entire team, it's goodbye. And please stay safe.